So if you wanted to fly a Boeing 737 from New York to Los Angeles, right? But using today's absolute best state-of-the-art electric vehicle batteries, the plane would honestly never even leave the tarmac.
No, it wouldn't. The physics just, they simply do not allow for it.
Right.
The battery packs you would need to generate that much thrust, they'd be so incredibly heavy that the aircraft just couldn't lift its own weight off the runway.
Which is crazy to think about, but that is the hard limit of our current electric revolution.
Yeah, exactly.
We have basically hit a wall with liquid lithium-ion technology, but what if you took the liquid out entirely?
Right, to remove it from the equation.
Yeah, what if the core of the battery wasn't this volatile, heavy gel, but a thin, solid piece of ceramic?
Which sounds like science fiction, but it's really not.
It's not. And so, welcome to the deep dive. Today, we are mapping the inflection points of QuantumScape.
Yeah, a really fascinating deep tech company.
Very much so. They are attempting to actually commercialize these solid-state batteries. So for you listening, whether you're, just trying to navigate the wild volatility of the tech sector, or you're just genuinely curious about what actually powers the next decade of transportation, this is basically a masterclass in reading the signals of deep tech investing.
It really is.
We're looking past all the hype to figure out if QuantumScape is finally crossing the chasm from just theoretical lab science into a viable revenue-generating business.
Which, that is the most precarious transition any company can make.
I know, absolutely.
In deep tech, the gap between having a brilliant patent and, actually surviving long enough to sell a real product, it's notorious.
The valley of death, right.
Exactly, the valley of death. It's this brutal environment where you are just burning through billions of dollars simply to prove your math works at scale.
Right. And to really understand the financial tightrope that QuantumScape is walking right now, you first have to understand the specific mechanical problem that they're trying to solve.
Yes. The technology itself is key here.
So, okay, let's unpack this. Before we even get to their massive strategy pivot or, the huge recent validation from Honda, let's break down the tech.
Good idea.
QuantumScape is a pre-revenue company. They are developing solid-state lithium metal batteries, and their entire defense against the rest of the market, their actual moat, is this proprietary ceramic separator.
Right, that's their secret sauce.
But let's ground this for a second. How does a solid piece of ceramic actually conduct electricity better than a liquid? That feels counterintuitive.
It does, yeah. So think of a traditional liquid electrolyte, like a really highly congested, chaotic swimming pool.
Okay.
When you charge or discharge your current EV battery, lithium ions have to physically swim through this messy liquid layer to get from one side to the other.
Like pushing through a crowd of people.
Exactly. It's incredibly inefficient. It generates a ton of heat. And liquid electrolytes are inherently flammable, which is obviously bad.
Right. Nobody wants their car catching on fire.
Exactly. So QuantumScape's ceramic separator essentially replaces that messy swimming pool with a high-speed rail system.
Oh, wow. Okay.
It is a solid material, sure, but its atomic lattice is designed specifically to let those lithium ions just shoot right through it almost instantly.
So without all that chaotic resistance of a liquid.
Exactly, without the resistance.
And that structural change is what delivers the much faster charging times. But the safety aspect is equally fascinating to me, specifically regarding something called dendrites.
Ah, yes. Dendrites.
Yeah.
They are essentially the silent killers of conventional batteries.
Right.
When you charge a lithium-ion battery quickly, the lithium doesn't always deposit smoothly. Sometimes it forms these microscopic, needle-like metallic spikes, and those are the dendrites.
Okay, so kind of like stalactites growing on the roof of a cave.
That's a perfect way to picture it, yes. And eventually, these microscopic needles, they grow long enough that they actually pierce the separator inside the battery.
And that causes a short circuit?
Exactly, which can lead to thermal runaways.
Yeah.
Or, in plain English, a fire.
Right.
But the ceramic separator is literally a physical, impenetrable wall. The dendrites just cannot pierce it.
So you can push energy into the battery much faster, get higher energy density, and you don't have the risk of a catastrophic failure.
Precisely. It's a genuinely brilliant engineering solution.
It is. But, as we know, having a brilliant piece of engineering in a lab somewhere doesn't just automatically translate into a profitable business.
Unfortunately, no, it does not.
And that leads us to the massive strategic pivot that QuantumScape executed in 2024. because for a really long time, their plan was to build these batteries alongside Volkswagen in this heavily capital-intensive manufacturing joint venture.
Right, the traditional route.
Yeah, they were going to pour the concrete, build these huge factories, and stamp out the cells themselves, but they completely scrapped that plan.
They did.
Instead, they shifted to a capital-light recurring revenue licensing model.
Which was, quite frankly, a realization of their own core competency
Yeah.
and, a stark realization of their financial constraints.
Yeah. I like to think about it like the restaurant industry.
Okay, how so?
So QuantumScape initially thought they needed to spend billions of dollars to buy land, build brick-and-mortar restaurants, hire all the staff, manage the food supply chains, and, deal with local zoning laws just to sell their food.
Which is unbelievably expensive and risky.
Exactly. That was the Volkswagen joint venture model. But then they kind of woke up and realized, wait, our value isn't in building dining rooms. Our value is our secret sauce recipe.
Right, the ceramic.
Yes. So they pivoted to a franchising model. They decided to just license out their highly guarded ceramic separator recipe to legacy manufacturers companies that already own the gigafactory.
Right, let them do the heavy lifting.
Exactly. They preserve their cash, they avoid the absolute nightmare of heavy manufacturing, and they simply collect a royalty for being the brains behind the operation.
It is a textbook survival mechanism.
Yeah.
Especially for a deep tech firm facing that valley of death we talked about.
Yeah.
Because when you look at their current operations, they have just finished installing their Eagle Line pilot production system.
Right.
And they're producing initial low volumes of their QSE-5 cells, but the cash burn required to get even to this pilot stage is just extraordinary.
Oh, the numbers are completely sobering. When you look at the projections, they are expected to generate literally $0 in revenue in 2026.
Yep, zero.
Then they're projecting around 51.2 million in 2027, and maybe nearing 100 million, like 98.6 million in 2028. Yet their market cap is hovering around $4.3 billion.
It's a huge valuation for those revenue numbers.
Right. The stock is trading at roughly 43 times projected sales for 2028. So I have to play the skeptic here for a minute.
Go for it.
At a $4.3 billion valuation, for sales that might happen 4 years from now, aren't investors basically just paying a massive premium for a lottery ticket that hasn't paid out yet?
Well, 43 times projected sales that are years away is undeniably a steep multiple. There's no getting around that.
Yeah.
You are paying for the future realization of intellectual property, not current cash flow. But this is exactly why that licensing pivot we just discussed is so critical.
That it saves money.
Exactly. If QuantumScape were still trying to build massive gigafactories entirely on their own, that $4 billion market cap would just be eaten alive by capital expenditure.
Right, they'd burn right through it.
They would have to dilute shareholders continuously just to buy manufacturing equipment. So by shifting to licensing, they dramatically reduce their capex. They preserve their cash runway.
Okay, that makes sense.
The market is paying that premium because it believes the ceramic separator is so vastly superior that eventually the entire EV industry will be forced to pay a toll to use it.
And the thesis that the industry will be forced to pay that toll just received a massive, massive jolt of credibility.
It really did.
We need to talk about the validation from Honda R&D because this fundamentally shifts the narrative for them.
Oh, absolutely.
Honda just completed a really strict formal technology evaluation of QuantumScape's batteries. They ran competitive benchmarking and concluded that the technology demonstrated, and I'm quoting here, compelling and unique advantages.
And the significance of a legacy titan like Honda going on the record with that phrasing, it really cannot be overstated.
But wait, let me push back again. Did Honda actually sign a massive purchase contract, or did they just hand QuantumScape a blue ribbon at the science fair?
That's a very fair question.
Because there is a huge difference between a nice engineering compliment and a binding revenue agreement.
Yes, that is the crucial distinction to make. It is not a commercial purchase order yet.
Okay.
However, in the automotive industry, passing a rigorous bench test by an OEM is the mandatory precursor to any commercial contract.
So you literally can't get the contract without this step.
Exactly. It effectively de-risks the technology for the entire sector.
Yeah.
You see, startups publish favorable lab results all the time.
Oh yeah, constantly.
But when Honda, an organization that is renowned for its almost obsessive engineering and safety standards, brings your cells in-house, stress tests them under real-world conditions, and publicly validates the results, it changes the conversation.
Because they aren't just taking QuantumScape's word for it anymore.
Right. It proves to other automakers that the ceramic separator can handle actual commercial stress, not just some perfectly simulated lab environment.
And here's where it gets really interesting, leading to perhaps the most fascinating part of the entire QuantumScape thesis.
Yeah,
When most people hear the word Honda, they picture a Civic parked in a driveway.
sure.
But Honda is not just a passenger car company. They are a global powerhouse in motorcycles. They make power equipment. And crucially, they build aircraft, the Honda jet.
Which completely redefines the total addressable market, or TAM, for QuantumScape.
Oh, completely. To put this in perspective, think back to our Boeing 737 example from the very beginning of the deep dive.
Like the plane they couldn't take off.
Exactly. The benefits of a solid-state battery, lower weight, higher energy density, rapid charging, those are nice conveniences in a passenger car.
Definitely.
But in aviation, or even small-scale mobility like motorcycles, those features are the entire ballgame.
They are absolute necessities.
Right. To fly a commercial plane on liquid lithium-ion batteries, the thrust-to-weight ratio is just fundamentally broken. The energy density of solid state is literally the dividing line between a world where electric flight is physically impossible and one where it's inevitable.
That's a great way to put it.
So does this Honda validation mean QuantumScape is suddenly no longer just a niche EV supplier, but potentially this electrify everything platform?
That is the exact implication. Because, as we said, a conventional EV battery is far too dense in weight and too sparse in energy to ever put into an aircraft fuselage.
Yeah, it just won't fly.
Literally.
Yeah.
But a lighter, denser, solid-state cell makes electric aviation viable. So Honda's validation suggests that QuantumScape's intellectual property could actually become a cross-sector electrification standard.
Wow.
If they can manufacture the ceramic reliably, they aren't confined to competing just for passenger vehicles anymore. They can target aerospace, heavy shipping, micromobility. The TAM just blows wide open.
So if the math on electric flight suddenly works and a legacy titan like Honda is publicly validating the tech, you would think Wall Street would be throwing a parade.
You would think so, yes.
But that is not what we are seeing in the market sentiment at all. There is this glaring disconnect between the technological validation and how the stock is actually trading.
It's a classic tug-of-war between long-term vision and short-term financial reality.
Totally. Because on the day of the Honda news, QuantumScape shares surged about 12.9%, though it did pare back an earlier 16% gain.
Right.
It was a solid pop, and it broke some bearish momentum. But zooming out tells a completely different story.
It's been a rough ride.
Yeah, the stock is down over 28% year-to-date, even though it remains up over 76% over the trailing 12 months. It is incredibly volatile, and the analyst community is heavily, heavily fractured on how to value the company.
The divergence in price targets is very telling here.
Right. The broader street maintains a mean price target of $7.14, which implies potential downside from current levels.
So they're skeptical.
Yeah, indicating the broader market hasn't fully priced in the implications of this Honda deal at all. But then you look at the major banks projecting out to early 2026. Evercore is targeting $10. Morgan Stanley is at $8.50. HSBC is at $8.30.
It's a wide spread.
Why is there such a massive spread between the mean target and these major institutions?
Well, the analysts with the $8 to $10 targets, they are modeling the commercialization phase.
Okay.
They're looking at 2026 and 2027, anticipating that the licensing royalties will actually begin to flow, and they're pricing in that expanded TAM we talked about.
Right, they're looking at the big picture.
Exactly. But the analysts pulling the mean down to $7, they are heavily anchored to the immediate cash burn.
The survival mode.
Yes. They see a company that still has to survive 2 more years of highly expensive pilot manufacturing before a single royalty check ever materializes.
And the institutional money is just as conflicted. Recently, 209 institutions added shares, but 230 decreased their positions. But the true point of friction that we absolutely need to address is the recent insider selling.
Yes, the executive stock sales are definitely drawing scrutiny. And rightfully so.
I mean, we are talking about massive insider movement.
Yeah.
The chief technology officer, Timothy Holm, recently sold over 1.2 million shares. He cashed out roughly $10 million.
That's a lot of chips off the table.
It is. And Jeffrey Straubel, another key insider, sold over 292,000 shares for nearly $2.85 million.
Right.
So look, if you just invented the best battery in the world, and if the IP is truly as revolutionary as Honda claims, and you're sitting on the precipice of electrifying global aviation, why is the CTO taking $10 million off the table right now?
It's a very striking visual, isn't it?
If I am an investor, I want my chief technology officer holding every single share completely locked into the future of the company.
And that is the most natural reaction for any observer. Insider selling, especially in a pre-revenue company, always looks alarming on the surface.
It looks like a huge red flag.
It does. But we have to contextualize this within the actual mechanics of corporate compensation in the deep tech sector.
Okay, how so?
Executives in these companies spend 5, sometimes 10 years essentially living in a laboratory, building highly theoretical tech.
Right.
Their compensation is heavily weighted in equity, which is totally illiquid for years. They can't spend it.
Yes, paper money.
Exactly. So when a major validation event occurs, like the Honda news and the stock surges double digits, you almost always see executives trigger sales.
Oh, so it's just a rare window of liquidity for them.
Yes. Furthermore, these sales are almost always executed under what are known as 10b5-1 plans.
Okay, what are those?
These are automated trading schedules set up months, sometimes a full year in advance. They trigger automatically when a stock hits a specific price or on a predetermined date.
So he didn't wake up the day of the Honda news and say sell.
No, not at all. The SEC designed these plans specifically so executives could diversify their personal wealth without being accused of trading on breaking insider news.
Okay, so the CTO selling isn't necessarily him hitting the panic button because the technology is suddenly failing.
Not necessarily, no.
Yeah.
It is standard wealth diversification for a founder who has had their entire net worth tied up in a highly speculative asset for years.
That's fair.
That being said, it is completely fair to view it as a risk factor.
Right.
Insider selling does remove a degree of skin in the game. Even if it is pre-planned, it signals that the executives themselves recognize the inherent volatility of their stock and they want to secure real capital while the price is favorable.
Okay, so the CTO is taking some chips off the table to diversify his wealth. Fair enough.
Yep.
But honestly, if I were in his position, I would be looking over my shoulder too. Because the intellectual property they are trying to protect with this licensing model is under heavy siege.
Oh, without a doubt.
They are definitely not the only ones trying to solve the solid-state puzzle.
The electric vehicle battery space is arguably the most intensely competitive and fiercely capitalized landscape in global engineering right now.
It is a brutal arena. You have giants out there like CATL and Samsung, SDI, and these are not scrappy little startups.
No, these are global behemoths.
Yeah. They have practically unlimited capital, they
Right.
establish supply chains, and deep relationships with every major automaker on Earth.
Right.
And they're aggressively developing their own solid-state solutions, many of them even exploring alternative chemistries, like polymer-based solid-state rather than ceramic.
Yes, exactly.
So how does a company with zero revenue and a massive cash burn rate survive a war of attrition against Samsung?
Well, you survive by refusing to fight a war of attrition. You do not fight them on the manufacturing floor. This goes right back to why the licensing pivot is their ultimate defense strategy.
Right, the restaurant franchise thing.
Yes, QuantumScape does not have to outbuild Samsung. They do not need to construct bigger gigafactories or hire more factory workers than CATL. They simply have to fiercely protect the patents on their specific ceramic separator.
Because if it's the best, it's the best.
Exactly. If QuantumScape's atomic structure truly yields the safest, most energy-dense cell, the economics will eventually dictate the market.
So Samsung would just pay them instead of fighting them.
Right. Those well-funded behemoths will run their own numbers and realize it is significantly cheaper and faster to just pay QuantumScape a licensing fee rather than spending billions trying to invent a legal workaround for their patents.
That makes total sense.
QuantumScape's goal is to become the Intel inside of the EV world. They don't make the computer. They just own the vital component that makes the computer work.
That completely reframes the entire investment thesis for me. You aren't betting on their ability to pour concrete and build factories. You are betting entirely on the enforceability and the superiority of their patents.
Exactly.
So, looking at the immediate future, what should the listener be watching for? Like, what does the catalyst calendar look like for QuantumScape?
So the critical event on the horizon is their Q2 earnings and production update.
Okay.
Specifically, the market will be heavily scrutinizing the data coming off that Eagle Line pilot system we mentioned.
Because they have to prove they can make it at scale.
Right. Producing a perfect ceramic separator by hand in a clean lab is one thing. Stamping them out continuously with zero defects on an automated line is an entirely different engineering challenge.
Right. The real world is messy.
Very messy. The market needs hard data, proving they can yield these QSE5 cells consistently to satisfy the early testing demands of customers like Honda and Volkswagen.
Got it. So pulling all this research together, many institutional analyses out there are giving QuantumScape a bullish score of 7 out of 10. But that comes with a massive caveat. This is strictly for highly risk-tolerant investors looking at a 12 to 24-month horizon. The strategy is essentially to position yourself just ahead of that initial revenue inflection point that's projected for 2027.
Exactly. This is not a quick quarterly trade.
Well,
This is a multi-year thesis that depends entirely on the successful execution of that licensing transition and the flawless ramp-up of the Eagle line.
so let's bring it all home. We have mapped a company that recognized its own limitations and made a really shrewd pivot from capital-heavy manufacturing to a far more scalable licensing
A
model.
very smart move.
They've subjected their technology to a grueling real-world stress test from Honda and past, which fundamentally de-risks the IP and literally opens the door to electrifying heavy mobility and aviation.
Huge catalyst.
Huge. Yet they remain a pre-revenue company burning significant cash. Their executives are utilizing liquidity windows to sell off shares, and they have the largest manufacturing titans on Earth breathing down their necks.
So what does this all mean? Ultimately, navigating a deep tech company like this requires immense patience and a really sharp focus on execution metrics.
Right.
The foundational science appears to be validated. Honda proved the ceramic works. Now the burden of proof shifts purely to business execution. Can they scale the pilot line? And can they lock those legacy automakers into binding licensing agreements?
That is the million-dollar question, or I guess the $4.3 billion question.
Exactly.
I want to leave you with a final thought to mull over. If solid-state batteries truly are the dividing line, if they're the only physical way we ever achieve true electric aviation, long-range heavy shipping, and uncompromised mobility, who ultimately reaps the biggest reward?
That's a great question.
Will the eventual winner of the electric revolution be a household name automaker whose logo is just stamped on the hood? Or will it be a behind-the-scenes, deep-tech licensing middleman that quietly collects a royalty on every single mile driven and flown? Keep a close eye on those pilot production numbers. Until next time.